Good afternoon, Facebook land. It is noon, it's Friday, and that means it's time for the fourth installment of the Land of Lincoln Credit Union's Friday Finance Facts. My name is Jeff Drake. I am a mortgage loan officer at Land of Lincoln Credit Union, and I'm going to take a few minutes today just to go over some tips and suggestions that you as a potential home buyer can use to help prepare yourself for home ownership. This is a live presentation, so if you have any questions, just go ahead and pass those along and we can get those maybe at the conclusion of the presentation. So the first thing that I want to touch on, what I think is probably the most important factor to think of when you're considering home ownership, is to determine whether or not you're ready to buy a home. Whether you just landed a great new job, or you're a college graduate, or mom and dad finally said, hey, it's time to get out of the basement. You're going to want to conduct a pretty thorough self-analysis to make sure that homeownership is going to be a right fit for you. So how are you going to do that? There are a few questions you can ask yourself to try to make that determination. Let's start with, am I financially prepared? Homeownership is going to be it's going to have a lot more costs associated with it than renting is. For instance, if you're a renter and you have an issue with your house or your apartment, you get on the phone, you call your landlord, and boom, it's fixed. As a homeowner, you can still get on the phone and call someone and they can come and fix it, but they're going to send you a bill, and home repairs can be rather costly. So you're going to want to make sure that you're financially prepared for the burden of home ownership when it comes to home repairs. Other costs associated that you're going to want to consider: property taxes, homeowners insurance, possibly homeowners association dues. Even monthly utility bills are likely to increase as a homeowner than what they are as a renter. Initially, you're probably going to have some deposits you're going to have to make. So you're going to want to make sure that you're going to have your finances in place and that you're prepared for those costs. Another question you're going to ask yourself, this may seem like a strange one, but am I physically prepared to be a homeowner? What I mean by that is, are you physically able, do you have the know-how, the equipment maybe even, to perform routine home maintenance? I'm talking about lawn care, painting, plumbing, trim work, fixing your gutters, whatever the case is. Are you physically capable of doing that? Again, if you're not, it doesn't mean you can't be a homeowner. You can still make a phone call. People are out there to provide those services, but again, they're going to send you a bill for those services, so you're going to want to make sure that you're prepared for that. Another question to ask yourself, again, might seem a little strange: am I emotionally prepared to become a homeowner? Am I mature enough to be a homeowner? It doesn't matter if you're in your 20s, your 40s, or 60s, whatever the case is homeownership going to fit my current lifestyle, my current maturity level? Likely the home purchase is going to be the largest financial transaction that you make in your life, for most of us at least. So you're going to make sure when you make that kind of a major commitment that you're on a maturity level that's going to be appropriate for that. To kind of explain some of these, I can draw off an example out of my own life. The first home that my wife and I bought, we kind of rushed into it. We found a house we liked that was good enough. We went ahead, we bought it. It was a bi-level house, had a bathroom in the basement. 7 days after closing, we were upstairs one night. I don't even think we'd used the bathroom in the basement. We heard some water running, so I ran downstairs and the toilet kind of looked like a fountain. I have no idea what was going on, but cut to a few days after that, I had a plumber digging up my front yard and replacing the main line out to the sewer to the tune of about $1,000. So we were immediately tested on a financial and emotional level, certainly, for our readiness to be homeowners. Luckily, we worked past that. But going back to being financially prepared, you're also going to want to take a look at your current employment status. As far as your actual position at work, is that a stable position? Are transfers a possibility? You want to get into a situation where you buy a home today and then your boss comes to you in 6 months and says, hey, by the way, we're going to move you to our plant out in New Jersey or something like that. Then you have to turn around and try to sell a house. Make sure that your position at work is stable. In addition to that, income. Make sure your income level is going to be secure and stable. Do you have the possibility of maybe in 6 months to a year having a promotion? If you buy a house today on your $50,000 a year annual salary, and then in 6 months you get bumped up and you're making $75,000 a year. Maybe you settled on a house at one income level, and then in 6 months you think, man, I could have bought this house that I really wanted had I just waited it out a little bit and done a little research on my position at work. Of course, on the flip side, demotions and layoffs. If you have a job where it's a possibility that your income could be cut, that maybe you're going to be laid off for a period of time, maybe renting is the way to look at it right now. You don't want to get into a situation where, again, maybe you bought this house on your $50,000 annual salary. 6 months you're making $40,000, you can't meet your house payment. That's sort of the worst case scenario. So just make sure that your employment and your income are secure and stable. Another thing I want to touch on, and as a loan officer, I really can't stress this enough, and when you're trying to determine whether or not you're ready to become a homeowner, this should be really a major component of that self-analysis, and that's to know your credit. There are plenty of tools out there that you can use to monitor your credit. Make sure you know what's out there. Establish a good credit history. As a loan officer, I'm going to catch any delinquencies, past delinquencies, any blemishes on your credit, and you're going to need to be prepared to explain those, perhaps even in writing. We may even need detailed explanations as to what happened, why it happened, and what you did to overcome that. So make sure you know what's out there. Like I said, there are free services, annualcreditreport.com, even services like Credit Karma. Don't maybe put too much faith in the scores that you get from those, but look at your credit. You can get credit alerts sent directly to your phone. Make sure you know what's out there. If you do have some issues from the past, let's say you have a medical bill from a couple years ago that went to collection, clear that up before you come in. Obviously the process is going to go a lot smoother if your credit's in good shape. So let's say we've determined that we're financially, physically, emotionally prepared, our job's in good shape, our credit's in good shape. So now we're going to go out and start shopping for a house, right? Actually, that's wrong. The next thing we want to do is go out and start shopping for that loan. We want to get ourselves pre-approved and determine what we can afford before we go out and try to find that house. So I would suggest start by inquiring at your local credit union or bank, but preferably your credit union, and ask them whether or not they provide mortgage services. If so, ask to sit down and meet with the mortgage loan officer. A local lender, rather than some of these online services you might see in commercials, we're going to have more insights into the local housing market, job market, service providers that are going to be used throughout the loan process. So it's important that you talk to a local lender, and it also gives us the opportunity then to explain to you the different mortgage programs available. We can kind of bounce ideas off of each other and come up with which program is going to best suit your needs and your situation. So once we've done that, make sure you get yourself pre-approved prior to looking at homes. Like I said, the last thing you want to do is fall in love with your dream home, that's $200,000, and then find out you're qualified for $120,000. So make sure you get the financing in place first. And make sure that you set for yourself a realistic price range of homes that are best going to suit your existing lifestyle and your budget. It's like they say, you don't want to be house poor. So make sure that we can find something that is going to help you to maintain your budget and your current lifestyle. And the way that I try to do that is I try to ask borrowers, rather than, what amount of loan are you interested in, what monthly payment are you comfortable with? That then allows me to try to calculate out and see what maximum loan amount is going to work. And if someone tells me, $800 a month is what I'm comfortable with, but I'm looking for a house that's $175,000, we're going to have to do some talking and try to find maybe a middle ground there, or really find out what you're comfortable with. I might be able to qualify you on paper for a $1,500 a month house payment, but are you really comfortable paying $1,500 a month? Is that going to allow you to maintain the lifestyle that you've grown accustomed to over the years? And only you really know that, so that's something you're going to want to really take the stock of in that self-analysis. Once we get you pre-approved, at that point you're free to go out and start shopping around for homes. Of course, I would suggest to talk to a local realtor, an experienced realtor. Ask around, ask family, friends, coworkers, ask your lender. I work with realtors on a daily basis. I can suggest to you local lenders who might better suit your personality or your needs. So make sure you ask around and find an experienced realtor. Another thing to touch on, even before you try to make the decision as to whether or not you're prepared to buy a home, and certainly throughout the process, establish a savings plan. Even though there are mortgage programs out there that allow for zero down payment in certain circumstances, obviously it's a great idea to go ahead and have an established savings plan. Have a chunk of money on deposit in case once we get to closing, you need to cover some closing costs. Moving expenses, moving is very expensive. U-Hauls, deposits on utilities and so forth. So make sure you've got a savings plan. Plus, once you become a homeowner and you do have increased costs associated with being a homeowner, you've got that saving plan established as part of your lifestyle, and you can maintain that and make it a lifelong commitment. Another thing you want to do, I always suggest to people, is to request a professional home inspection. Home inspections can help uncover hidden issues with homes that appraisals may not pick up. This can save you potentially thousands of dollars as a homeowner, and possibly, if there are issues caught, could even allow you to negotiate a little bit on the price. Excuse me, I can even go back to my example of the home my wife and I bought. As I said, we were in a hurry, and but mainly I, foolishly waived our right to a home inspection. So we've always thought that if we had had the home inspection done, this plumbing issue could have been caught and we wouldn't have been out all the money. So definitely ask around again as you would with a realtor. Ask coworkers, friends, family, your lender. Make sure you find an experienced and licensed home inspector. One thing to remember too with the mortgage process, it's a very lengthy process. From start to finish, there are a lot of people involved. There's the buyer, the seller, the realtor, the lender, title companies, and so forth. So what can you do as the home buyer to try to speed up that process? I would always suggest make sure that you provide the required documentation that's requested of you in a timely manner. If I were to ask someone, hey, I need a pay stub, and 2 days later they get it to me, and then now I need a bank statement 2 days later, these days add up, and they can add weeks on to the time that it takes from application to closing. So just make sure that that throughout the process you're communicating well with your lender and your realtor, and that you're getting all the required documentation in a timely manner. I always tell people at the beginning, by the end of this, when we're sitting in the closing booth, you're going to get really sick of seeing my name and number pop up on your phone and texts and emails and calls, but just keep your eyes on the prize, stay focused. The prize, of course, are those keys that you're going to get in the closing booth that day. So let's put ourselves there. Let's say we've closed on our mortgage, we found our dream home, everything is great. We're not quite done yet. Let's make sure that before we really settle in, call your credit union, call your bank, and make sure you update all of your address information, all of your contact information. You've worked so hard to get to this point, the last thing that you want to have happen is to miss a bill and have your credit damaged. So make sure that you do update all your information after you close on your mortgage. So guys, that's pretty much all I have for today. I hope that you've all gained something from this. Do we have any questions?
Jeff, there was one question. What kind of documents are commonly asked for by lenders?
Sure. So the most common things that I'm going to need that you're going to have prepared when you submit your application are going to be pay stubs, typically 30 days of pay stubs, 60 days of bank statements from all bank accounts that you have, and then your last 2 years of W-2s and tax returns. If you can have those available, that makes the pre-approval process go a lot smoother.
Great. So. I have one question. A lot of people are using the for sale by owner websites, or they're going directly with someone who's selling their house on their own. Do you have any specific tips for someone who's not using a realtor necessarily?
Absolutely. And goes and it is becoming more and more common. I think if you do decide to go that route, make sure you contact an attorney to draw up not only the sales contract, but then obviously make sure that the deed and everything and the property transfer is going to be done in an efficient legal manner. So make sure you're going through the right channels. Even if you're not using a realtor, use a title company, use an attorney, and just make sure that everything is done the appropriate way.
Awesome.
Okay. Well, that's all we have. If you do have any other questions, more specific questions, please give us a call. Stop into one of our branches. You can speak with myself, Cindy Kostinsky, or Tricia Kramer. We're more than happy to meet with you at any of our offices and answer any questions you might have. So that's all I've got for today. So have a great weekend and try to stay cool out there.